You're listening to the Finance Magnates Daily Brief, brought to you by Finance Magnates Intelligence.
Today's Thursday, the 20th of August, 2026, and these are our main stories. Two senior executives take ownership of LCG, retail brokers expand into multi-asset trading, and Webull returns to profit. To begin today, two senior executives have taken ownership of London Capital Group, following the exit of Charles Sabe. The FCA-regulated broker is now owned by MBDW Holdings, a company ultimately controlled by Chief Executive David Worsfold and Managing Director Matthew Basi. Companies House filings show the change took effect yesterday. The value of the transaction was not disclosed. The move follows the collapse of Flowbank, the Swiss bank founded by Sabet, which had previously owned LCG. The UK business, however, continued operating independently after the restrictions were subsequently lifted following the bank's failure. LCG also changed its model in 2023, becoming an exclusive introducing broker for IG Group. Turning to the wider brokerage industry, retail firms are increasingly building businesses that stretch beyond their traditional markets. Pepperstone is recruiting a head of cross-asset strategy as it expands across derivatives, crypto, and other products. The broker's chief operating officer, Tom Williams, told Finance Magnates that the biggest opportunities increasingly sit between asset classes rather than within them. The shift comes as crypto platforms move further into regulated financial markets, while retail brokers are also exploring services beyond trading, including payments and banking. Pepperstone itself launched a crypto exchange in Australia this year, while other brokers are pursuing electronic money licenses and around-the-clock trading opportunities. Meanwhile, Webull has returned to profit, reporting second-quarter net income of $24 million, compared with a $28 million loss a year earlier. Revenue rose 51% to $199 million, while trading-related revenue jumped 66% to $148 million. Options revenue reached $88 million, supported by a 68% increase in options contracts during the quarter. Customer assets stood at $29 billion at the end of June, up 79% from a year earlier, although they slipped to $27 billion in July. Finally, an investigation has linked an alleged Israel-headquartered fraud network to investment scams that reportedly targeted more than 4,000 Australians. According to ABC and OCCRP reporting, the network used fake news articles and promises of AI-assisted trading to lure victims, with estimated losses running into hundreds of millions of dollars. The group was reportedly connected to call centers across several countries, including Bulgaria, Ukraine, Cyprus, North Macedonia, and Israel. Investment scams remain Australia's most costly fraud category, with reported losses reaching $838 million in 2025. That's your Finance Magnates Daily Brief for August 20th, 2026. For the full stories, head to financemagnates.com. We'll be back tomorrow. Stay sharp.